What's going on, everyone? Oh, look at this. This is. There we go. Ooh. Stay put. Okay. There we go. How's it going, everybody? Lawrence from financialthing.com. Thursday evening, peer-to-peer lending and other things. Is this camera straight? Oh. It's doing funky things. Bear with me for just a second. There we go. Peer-to-peer lending and other things live stream. I hope you're having a good week. It's almost the weekend. Super glad it is. If you can hit that yellow little thumbs up, or not yellow, just the thumbs up button, just to tell Google that you like the stream. You can always change your mind later. I mean, I came up here with a cup of water and I have no idea what I did with it. So, another one of those days. We're going to be looking at some peer-to-peer lending news. Probably delving into a couple of accounts today, see what kind of loans are available. What else? We'll be looking at some financial accounts for, I think, Capital Rise, and some funding secure loans that have been updated. Just move those over here. A little bit of Blend Network news. And we have to look at the US stock markets today because they are absolutely getting creamed. Taking a good old pasting. It's making the move to cash look like a good move so far. We'll see what happens. But yeah, we're going to look at what's going on in the markets also at the end of the stream. So if you're into investing, you like that kind of thing, stick around. Hope you get a lot out of it. I hope you're doing well too. You and you. Appreciate you joining wherever you are in the world. It's an extremely balmy, I don't know what the weather is. Let me Google the weather. Here in centigrade. 33 degrees today. It is really hot. It's really, really hot. Too hot. So, low of 23. It's too hot. It's supposed to be still spring too. It's crazy. But I hope you're experiencing some better weather in the UK. So, quick hi to everybody in the stream. Welcome to you. We got John Morgan here from a lovely, warm evening in Swindon. Mark Mason, hi. Good evening to you, Mark. I'm glad Surrey is warming up a little bit. And Colin is here in a balmy 19C in the Peak District. Peter Vince in Leatherhead. Remember that guy from, what was the movie? I think it was Snatch, right? Remember the guy, what was his name? Bricktop. I just remember him going, Peter, how are you? At the boxing match. Anyway, Gail Leach is here from a sunny Bulgaria. Okay, what's it like in Bulgaria? I have a good friend from Bulgaria. Sometimes he tunes into the stream. Big shout out to Vladimir. Paul Bagworth and Kenilworth. Sound has been a little quiet this week. If others agree, maybe you could wind it up a little bit. Okay. How is that? Is that better for you? I turned up the sound a little bit. I winded it up. Alan Duffy is here having a great week with a 25 quid premium bonds win. Not looking elsewhere. Yeah, that's looking pretty good when you can win £25 this week. Alan Stratford is here from Worcestershire. Oh no, tested positive for the vid. Sorry to hear that. Hope you're not feeling too rough there, Alan. John Day, all hellos from Nottingham. Rates up to 1%. Yeah. Zopa offering higher than 1% too. I saw in the news this week. Paul New is in Stockport. He says inflation's going through the roof. Markets fell off a cliff. War in Europe, Chinese megacities, and crazy lockdown. Anything I missed? The good news is it's nice and sunny in Stockpo. I presume you mean Stockport. Yes. You didn't miss anything else. Well, you did miss maybe some economic news, which I'll talk about later. Brian in Woburn is here. Nice to see you, Brian. Aki Chap, of course, in Accrington. Wouldn't be the same without you. Alan Brooks from Pinner in Middlesex. I hope the volume's okay now. Let me know if it's too quiet. And I was thinking about future guests for the peer-to-peer lending live stream, and if there's anybody that you would like for me to try to get on as a guest for a peer-to-peer lending company, just put it in the chat. I need to do this up. It's too much chat. Put it in the chat and let me know, and I will try to get them on board. I got the England shirt on today. I'll try to get them here and see if I can get them on as a guest. I think I sent somebody an email this morning to get them to come on. But yeah, if there's anybody who'd like to come and grill, let me know, and I will do my best to get them on here for you. So let's get right into the news. See what's going on. Bingo, bango. Here we go. Oh, wow. Looks like somebody's just fired up the Harley Davidson outside. There we go. There's the weather. Zoom in a little bit for us blind people out there. Shojin is going to offer first charge development financing, so veering away from the second, well, not veering, adding, and they're going to be adding and expanding into first charge development financing. There is Mr. Jatin Ondia, who we had on the stream recently. Good interview with them. They're going to be adding first charge development finance within the next few months to become a one-stop shop for developers. As you know, Shojin really focuses on mezzanine financing, which is second charge. They're going to start providing first senior charge facilities to the same developers to save time and money. What they're doing this for is to save fees. They figure if they can offer both first and second charge lending, then these developers don't need to pay twice for legals and valuation fees, saving some cash. Jatin says, we're looking to add senior funding lines to what we do. It's not because we want to be a senior lender. It's not our core market. We like where we are, but it's to improve efficiency. If the developers come to us, their costs would go down, adding to their bottom line. It cuts out the hassle of having to work with others. It will be a game changer. Good thing is for you, if you are a Shojin investor there, that means there'll be increased opportunities to get loans. There'll be more availability on the platform. So sounds like that could be a win-win if Jatin gets it right. Being that they don't usually do first charge, but we'll wait and see. I hope it'll be okay. You know what? Let's hop on Shojin's website and see what they got. See what kind of things they have. Being funded. Funding now. Reading Town Center. 2.96 million funding target. Quite a big loan. Look at this annualized projected returns, 22.5%. This is a site located in Reading. It's a 5-minute walk to the railway station. They've got planning permission for the conversion of the existing office building into 110 residential apartments and 160 car parking spaces. The building itself is currently in excellent condition. Work will be limited to the conversion of the office space into self-contained apartments, and very little work is expected for the communal area. The developer is contributing £1.2 million, and Shojin and investors will be providing a £1.48 million mezzanine facility and $2.96 million in preferred equity to assist with the acquisition and the development of the property. Looks like Shojin will be putting in $85,000 of their own money, and the minimum investment is £5,000. Expected profit $6.3 million. Interesting project. Pretty big. 110 residential apartments. Reading, not a bad town, city, whatever you want to call it. So there is that available. Looks like this is the same project This one is ISA available. This is the 1.48 million pounds with a projected return of 14% for 25 months. Let's see. So yeah, part of the same deal, $5,000 you got to put in minimum. Yeah, that's a pretty high loan amount. Again, if you're high net worth, I guess, you could do deals like this, but in order to diversify correctly, you'd want to at least have 4 or 5 different projects on here, not just, I guess you could do one, but if you knew how to analyze the deal. Let's see what documents they have. Schedules, risks, bond terms and conditions, investment memorandum. So they have pretty detailed this is a 30-page document with details on the project. So yeah, if you're into that kind of thing, go check it out. See what else they got. I always like to hop on and just see what kind of deals are available. We got this Moto by Hilton Hotel. I think we looked at this before. Yeah, we did. So I don't know if we looked at this Reading one before. I don't think so, but so a couple of opportunities there if you're a Shojin. This one fully funded, so they got 1, 2, 3, 4, 5 opportunities right now in Shojin. Not bad. Propland benefits from commercial property bounce back. Propland has seen a 45% increase in lending volumes in the year to date against 2021 as the commercial property market recovers from pandemic challenges. Says that the real estate markets are buoyant. We probably should get Brian back on the stream. It's been a while. We had him on here a few months ago, and I thought it was interesting. Brian said that after suffering from 2 years of difficulty during the pandemic, commercial property is now seeing relatively stable occupational conditions. Data from Shavels in March has shown that investment volumes in commercial property grew by 35% year on year to reach £6.9 billion in January and February, and the average prime yield increased to a level last seen in October the 29th. October the 2019. So I think this bodes well for Propland as they do focus in the commercial property side of peer-to-peer lending. There's Brian right there. I don't know what type of deals they have. Maybe we should take a look. See what Propland has available, if anything. They are protected by Cloudflare. That's good. Cloudflare. See what they got. What do you have, Propland? Loans. Okay, they got one deal right now. Blockwich land with outline planning. 60% loan to value. Tranche A 7.5%. Tranche B 9.48%. A little thin on the deals. Wow. £3.9 million. £6.5 million valuation. Big loan. Looking for 3.9 million. The proposed borrower is a special purpose limited company. 2 adjoining parcels of 12.2 acres combined and outline planning for 150 dwellings. First legal charge over plots of land, a debenture, a 15-month interest reserve, the director's personal guarantee limited to the sum of $780,000. Yeah, I gotta tell you, I'm not a big fan of land deals. I think Propland is a good company and whatnot, but land deals scare me because they seem to be the ones that run into trouble when things don't go well. There's just so many things that can go wrong with land deals. The Holly, I don't know if you care. The Holly is back. Yeah, land deals, it's just so many things that I think could go wrong with them. to me, getting 7.5% for the risks, I just don't think it's worth it. Maybe I'm wrong. Tell me what you think. See what they've completed. Aberystwyth Marina. 147 berths plus a boatyard. So yeah, I mean, they got some loans that they've completed. That's a big one. Is that the biggest one? See here, one for 2.3. They got one for 3.2 million that's completed. So they got some sizable loans that they've wrapped up. So that's good to see. Yeah, I'm just not a big fan of land loans. I don't know. Just a personal thing. Not saying anything bad against that loan, but let's move on. Crypto lender Nexo has issued its first NFT-backed loan for £2.64 million against two JPEGs. These two little JPEGs right here. These two crypto punks. These things have got quite a lot of value in the NFT world. It's a 60-day loan valued at 1,200 Ethereum. Carries an annualized interest rate of 21%. This is Nexo. I haven't really paid attention to them, but you can, if you have cryptocurrency, again, we're not really focusing on crypto today. By the way, a good day to buy some Bitcoin if you're in the market. Dipped under 37,000 today. It's been a while since it did that, so I'm just saying. I'll probably be buying some later. Excuse me. Yeah, you can borrow. This is the great thing about blockchain. Look at this right here. I hope you can read this. You own cryptocurrency. You can borrow against cryptocurrency and get almost instant approval. You're approved within seconds and you get the funds within 24 hours because the cool thing about crypto is it's on the blockchain and it's easily verifiable and secured as collateral through ownership. So it can be done in seconds. Versus if you go try to get a loan at the bank or through other companies, it could take some time, especially high street banks. They take so long. Zopa savings account has attracted 100 million squid in 65 days. That's big. They have a hybrid easy access and notice account that is offering up to 1.45% AER. Whoa, big interest. The account was launched in February 2022 and just under 20,000 companies have opened an account since then, depositing a total of £115 million. They hope to reach 750 million by the end of the year. Since launching as a bank in 2020, Zopa, which closed its doors to us, has received 1.2 billion in deposits. You know what the crazy thing about Zopa? If Zopa cannot do well as a company, I don't know why they wouldn't be able to. But look at these interest rates. So for a 95-day notice account, you can get 1.45%. 7-day notice, 1.25%. Instant access, AER, 1.2%. And personally, I don't do notice accounts through banks anymore because I just don't think to get 0.25% is worth having to wait 3 months to get your money. I mean, if it was 2.5%, maybe I could see that, but you know, realistically, I take the low rate to have instant access anytime because there's sometimes, you know, you just want to get your money out and put it somewhere else. You won't have to wait 95 days to do that just to get an extra 0.25% in interest. I don't really see it. Maybe they have a penalty that you can get out earlier. But what's interesting about Zopa, look at how much they're charging on their APR for loans. It's not as bad as a credit card, but 15.4% APR is what you can borrow money at, 10 grand. If you want to borrow 25,000, it's going to cost you £2,249 a month at 15% APR. So look at this. You want to talk about, I don't want to use the word criminal, so I might get shut down, but this is banking right here. This is what banking is. They pay you 1.2% and they take 15.4%. So that's a hell of a spread. This is why those banks have those big downtown skyscrapers that you see everywhere, because the banks are doing really well. If you look at Money Supermarket, the best rate up here is 1.01%. Smart by Paragon. Just to go 0.1% higher, they get themselves to the top of the list. You can see Marcus here, Virgin Money at the same rate. So Zopa, I mean, offering 1.2% for now. That could change because it's variable. Pretty good rate. Peerberry repays investors 700,000 euros on war-affected loans. This is just really talking about loans that this European peer-to-peer company has had that have obviously been affected by the conflict that's going out in the Ukraine. So they are trying to get these loans paid back as quickly as possible. They're going to pay back a further 1.3 million euros later this week. That's good to hear because that's kind of a scary situation if you're an investor and you got loans in countries like Russia and the Ukraine. Probably be a little bit nervous. Minto's lenders have earned 2.8 million euros in interest just in the last month. Mintos is a big website, a big aggregate website for loans in different countries. Alas, if you are a UK resident, you can no longer invest in Mintos. But if you're a European resident, like maybe Gail in Bulgaria or Annabelle in Spain, you can certainly sign up. And they're saying average interest rate is 10.7% APR for April. That's pretty good. That's pretty good. I had a generally pretty decent experience through Mintos, although I do have some part of my portfolio locked up in defaulted loans due to me using the auto lend that put me into some shifty African loan that went bad, or one African company that had loans that went bad. Blend Network has opened a new lending office in Belfast. You see here they have a new manager. On May 3rd, they opened it up, headed by Philip Anderson. That's Philip Anderson. Nice guy, seems like. Nice. Philip, who has 10 years experience in banking and finance, joins the business from Allied Irish Bank, so he's a lot of experience. He's going to be running Blend's office over there, and what they are doing, obviously they opened this office so they can target more Irish property development deals and property lending deals, because Blend is pretty heavily focused in Northern Ireland in the past. So yeah, that's going to be a benefit for them. There's another bit of news. Some of the peer-to-peer lending company chiefs have been reporting a bumper ISA season. So a lot of money, of course, flowing out from these companies like Zopa, RateSetter, Funding Circle. This money needed a place to go. So some of the other peer-to-peer companies have benefited from these influxes. Bruce Davis, MD of Abundance, says the crowd bonds platform had a record run into the ISA year end. Significant inflows of ISA money and transfers from other peer-to-peer lending companies which are exiting, but also from stocks and shares ISA providers. Maybe people getting a little bit nervous with the stock markets. Easy Money has seen a huge inflow of retail cashola. A spokesperson said it's been great. Much better than last year. Retail money is flowing in massively. We're really happy. It's been a mixing pot of the closures of Zopa and Funding Circle. That's where the cash is coming from. Invest and Fund has seen a 300% increase year on year in IFISA inflows. Ben Shaw from High Net Worth Lending has said peer-to-peer investors can earn a far better return than leaving their money on a typical cash ISA account without the ups and downs associated with equity investing. So volatility of stocks. Atushka Poonwasi, MD of Simple Crowdfunding, has said that her platform continues to see significant inflow of ISA transfers as investors look for new homes. And then finally, last but not least, Rishi Zaveri, CEO of Lendwise, who we had on the stream, has said inflows have been encouraging since the launch of Lendwise, and his team continues to monitor them. So all very positive news, very bullish news for peer-to-peer lending. Oh, this is who I emailed this morning. I forgot who I emailed. It was this is Mr. Raji Kumar from Rebuilding Society. I offered him an opportunity to come on the stream. I've been a little hard on him at times because, you know, I see some issues with Rebuilding Society, so I'm going to be transparent and put them out there. They're planning to add more loans. What they did is a survey of more than 100 investors. Most of them were pretty pleased with its performance during the pandemic. They said the overall sentiment was that there is not enough loans on the platform to allow for a diverse portfolio. It has not added any new lending opportunities for 2 months prior to the survey. It said it was because Rebuilding Society had a difficult time finding good loans due to the challenging market condition. The platform said it is working to improve its outreach to businesses to bring more, ideally lower risk loans to the platform, but it only wants to add investments that will be 100% funded and where the borrower has passed its credit risk process. So what I get from that is that Rebuilding Society is struggling with the old balance of demand and supply. Too much or not enough retail cash coming in to fund the loans. They can't bring on the loans because they don't know if they're going to have enough money to fund the loans from investors. And then the loans maybe that they're looking at, probably not particularly high quality, and they're concerned, you know, they don't want to lower the standards of the loan. So it seems like they're dealing with some issues going on there. The platform said it would improve its communication and education on risk mitigating features such as the buyback guarantee. The buyback guarantee aims to reduce lenders' capital risk, with the microloan seller guaranteeing to buy back the loan part in the event of a default. This is something that companies like Mentos uses. Buybacks. I used to use those a lot. Those are the only loans I used to buy on Mentos back in the day. But Rebuilding Society found that 83% of its investors had never heard of the buyback guarantee. So there's some miscommunication going on there. At least Mr. Daniel Raj Kumar is listening to his investors and trying to iron out the problems. But I tell you, it's never a good sign when a platform hasn't put out a new loan in 2 months. So hopefully they can get that sorted. FSCS, our friends at the FSCS, warns London capital and financial investors about scammers. Again, not really peer-to-peer, but interesting stories. LCF bondholders who are waiting to get compensation of the £120 million that's coming their way. There's a lot of fraudsters who are approaching these London capital and financial investors saying they'll be able to recoup the full amount of their investment and that they should trust them with their services. Obviously scams. So FSCS is saying warning, danger. Peer-to-peer lending companies' complaints have continued to decline. This is really, really good news. The FCA has had less complaints from peer-to-peer lending investors about the companies. In the second half of 2021, P2P and crowdfunding products received just 601 complaints, down 227% from 1,968 complaints in the first half of 2021, 2,101 complaints in the second half of 2020. I wonder how many of those complaints were due to companies going out of business into administration. Zopa Bank had a total of 960 complaints, although only 135 of those related to investments, with the rest relating to banking and credit cards. One thing I thought was very interesting when I sat down with Robert in London from Plend, he said one of the biggest problems of running a authorized FCA company is the complaints, because once you get a complaint, it costs money to deal with that complaint. And every one you get, the money adds up. So you can see here that some of these big companies are getting a lot. 960 complaints from Zopa Bank. Retail Money Market, which traded under the Rate Setter brand, received 21 complaints related to investments with a total of 1,025 complaints in consumer credit. People, what are you doing out there with this credit? Stop getting high interest loans and then complaining about it. Funding Circle, which exited the P2P market recently, had just 49 complaints in the last 6 months of 2021, but they were able to close 93% of complaints after 3 days within 8 weeks. It upheld 4.7% of those complaints. However, in consumer credit, Funding Circle received 636 complaints. Blah, blah, blah. On to the next thing. Capital Rise returned £36 million to investors despite COVID challenges. If you're a Capital Rise investor, I've sat down with Capital Rise before. They've had some pretty good moves forward, so I decided to go in and take a look at their company's accounts because I'm curious to if they are actually making a profit or not. This is from Company's House. They have a report here. If you want to go in and read that, you can. It says they've enjoyed a highly successful 2021 financial year, closing $2.3 million round in fundraising in January 2021. And they grew their lending volumes by 38%. Now have lent $122 million since inception, secured against £509 million of prime London property in the home counties. They've distributed over £36 million to investors in capital and have returned more than $66 million to investors at an average rate of return of 8.7% with no losses or defaults. They've agreed to a £72 million funding line with an institutional investor, and they have grown their team by 25%. So it looks like they're having a good time of it at the moment. Let's take a look at their numbers. Now, I'm no accountant. The one thing I try to look at on these balance sheets is profit loss. See if I can find it. Come on. There we go. This is the year ending of 31st of July. Loss for the year, look at this, £1.48 million. We look down here, year ending 31st of July 2021, a year later, those losses are still there, not quite as bad as 2020, a loss of £1.138 million. So, capital raises are good. I think they have about 2 million something pounds in the bank. So enough to get them through a couple of years. See if I can find that. A bit slow with the old scroll. Come on. Where is it? Oh, I don't know. It's in there anyways. There's a couple of million in the bank. So they got money to float them through. This is a property market monitor from Blend for April 2022. It's absolutely insane how much house prices in the UK have increased. The housing price index rose 14.3% in March, up from 12.6% in February. So that's crazy amount year on year. It means property prices are just getting more expensive in England, which is good for peer-to-peer lending because these developers are going to continue building, continue taking out loans, and going forward with that. Unfortunate for first-time home buyers, though, because they're going to find it difficult to get on the property ladder because, deposits are going to have to put more into deposits. A couple of funding secure and administration updates. Camden Street, Liverpool, a loan of £665,000 has gone to sale. Of the property was completed. This was an update on April 29th. £506,000 was achieved. So you can see a shortfall of about 24%. And administration fees, of course, are going to have to be paid. Originally, this property was sold at auction for £712,000. There was a deposit of $71,200 forfeited as that sale, I believe, did not go through. Look at this guide price on the property originally at £350,000. So we'll see how much of that is left. Coventry, 6-bedroom house, £503,000 loan. The borrower redeemed the settlement sum, and a total amount received from the borrower of £672,389. So this one might actually be okay. So we'll see. See how much we get back. And then the property in gold is green. This one is just run into a lot of legal problems here. This is a loan of $720,000. And the last update, the borrower's representative is now advancing a number of arguments around the loan being granted, blah, blah, blah. The matter is now to form part of a wider litigation, details of which will be provided. You know, I mean, that's never a good sign when you're going to litigation on a peer-to-peer lending loan. It's going to take a long time to sort out, and expenses are going to be high. So, boo. That one is not looking good. Last but not least, phase 2 of the Dell in Birkenhead. £268,000 loan. Let's look at the update. More legal troubles. A statutory demand was first served last April. Blah, 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 blah. Continuing to pursue the guarantor's bankruptcy. He's doing everything he can to frustrate the position. So, you know, this is great examples of things that can go wrong in loans. The borrower can throw in the legal process, throw a spanner in the works, do anything they can to delay payment. It's happening on this loan. This one's going to be stuck for a while, and unfortunate. I was going to also look at a property partner loan that was a building that was sold. Property partner's been really quiet. Hang on one second, let me log in. How to remember my PIN. Here we go. Okay. No, that didn't work. I got to count on my fingers. Come on, you can do it. Okay. Hopefully it logs me into the page. No, it didn't log me in. Oh well, screw it. Let's move on. There's a new loan out on Axia Funding. Axia Funder. I haven't seen any loans from them in a while, but this one came in. Let's see what we got here. Investment opportunities. Housing disrepair claims. £150,000 required. Looking for a minimum of 150 to 300,000. This is to fund disbursements on a portfolio of 45 to 90 housing disrepair claims litigated by a law firm with a large dedicated team. The expected return is 25 to 28% per annum from a diversified portfolio of claims. 85% of investors' capital in each case is protected by AT insurance. In the event the law firm is unable to litigate the cases, the partnership has the contractual right to assign the cases to another law firm. We expect that investors' principal and investment gains will gradually be paid to their Axia Funders wallet within 9 to 15 months from when the offer closes. So it's a pretty juicy return if you want to take the risk. There is risk involved. Whenever you're getting paid 25 to 28% in interest, yeah. But that one has been 200% funded, but it's still open if you want to put some money in. And then there is one secondary market option here for £9. There you go. You can get £9 on the secondary market. Looks like not much available on them. Okay, so we have to talk about what the hell is going on in the stock market today. Because if you follow that at all, the FTSE actually not doing too bad. I want to talk about that a little bit. So I've been getting a couple of emails saying, well, maybe I should invest in the FTSE. FTSE seems to be doing okay, and the U.S. markets are not. If we look at the U.S. markets today, absolute taking a pasting. NASDAQ down 5.63%. We saw some big losses this week and last week. eBay down big amounts. Etsy, Shopify, some of the tech companies. This Teladoc company down 45%. All kinds of allegations going on with them. The Dow down 3.67%. That's a lot for the Dow. The Dow is usually wouldn't take that much of a hit. Yeah, so not looking good, and the S&P 500 down 4%. So I wanted to show you, for anybody that's thinking about the FTSE, FTSE's been okay for the last, year, from 7,076 back in May 2021 up to 7,503. And on paper, it might seem like the FTSE is a place to be running to at the moment. But what I wanted to show you is this. This is a chart of the FTSE 100 over the last 2 years. The black line is the S&P 500. The blue line is the FTSE 100. And what I want you to see here and notice is how these lines really run in parallel. Whenever there's a dip in the S&P 500, there's a dip in the FTSE, even though these companies are not the same companies, right? British companies, American companies, you think separated. But you can see this parallel. Right here's a good parallel. Right here's a great parallel. And over the long term, you see these parallels continue to really exist. Look. Down here, the dip. Up. The movement here. So just bear that in mind if you think that the FTSE is going to be immune from what I think is coming in the US markets. Not necessarily. If you look at the last 5 years' performance too, S&P 105%, FTSE 23%, bear that in mind. Let's look at the very long term. This goes back to 1984. Actually, let's see. Look at those parallel movements. FTSE's had a bit of a better run up here in the 80s. But yeah, just bear that in mind if you're looking to get into the FTSE and you think that might be a safe haven. I don't believe that it's going to be a safe haven at all. I think you're going to see some parallel movements here. So what the hell's going on in the stock? Well, let me show you the trading 212 portfolio that on Tuesday, if you were here on the stream, you'll see how much cash I'm holding right now. 12,000 in cash and only 5,000 invested. Starting to look like that timing happened to be very lucky. I can't claim that it was anything I particularly knew. We've been looking at all the signs of what's going on in the economy globally and in the US, and you can see here all these oil stocks absolutely in the red today. But interestingly enough, if you look at the markets, look at the oil prices today. Brent crude's up $111 a barrel. Crude, the futures, $108. So why are these oil stocks just getting hammered? Well, obviously the rest of the market is absolutely doing really poorly. There's just a lot of bad sentiment out there about the economy now at this point. CNN took a poll. Most Americans have a dismal view of the U.S. economy, saying 88% or 83% doesn't feel good about it. You got this U.S. Treasury 10-year yield now spiking over 3%. This was always one of the signs that we look for. When this goes over 3%, 3.25%, it's the time to really pay attention. This is a red flag. Quarter one, this was horrible economic news that we got today out of the US. Quarter one productivity dropped 7.5%. That's huge. The biggest decline since 1947. It makes sense that the stocks are going to get smashed because of what's going on. Okay, so that's bad. It was expected minus 2.5%, and it was plus 6.3% in the prior quarter. So really bad. We got the US dollar strength going up the Dixie. So another warning flag. When this starts to rise higher, that's another warning flag. So these things together, and with high inflation, high interest rates, it's obvious that eventually the market's going to come down, but we just don't know when. I don't know if this is a tipping point right now, but it seems like the volatility that's been happening in the last month, U.S. stocks just not doing very well. This could be the tipping point. Could be the tipping point. Look at the bonds here. See the bond start to rise. The bonds here start to go up over the last 3 months. European, same. See that parallel? That rise. Look, almost identical charts. Anybody that think Europe and the US don't move together, those charts are so close. And then Asia falling. So I mean, Asia could be the place where people start to run to try to get returns now if they think that the US, again, I've always said if you're a long-term investor, you are not going to really change your strategy. You just continue investing in index trackers, buy the lows when you have extra cash, just keep putting in money, don't try to time the market. The old stupid cliche, it's so true. Time in the market beats timing the market every time. I'm a goofball. I tried to time the market with a certain percent of my portfolio. For better or for worse, it's just what I do. I guess I'm a bit of a degenerate at heart, but be careful out there. Watch these signs. Watch the currencies if you're an active investor. You know, I had to talk about this today because I think it's important. It's like pretty dire situation that's going on today in the market. So hopefully you'll be protected. I think eBay's down 12.5% today. That's huge. I mean, for a big company like that in one day, that's volatility. Even, you know, I'm actually really surprised. I do have to take a quick look at the Bitcoin price, because Bitcoin, we've not really seen this huge volatility in Bitcoin till today. In the last 24 hours, down 9%. I mean, I'm looking at these numbers right here going, wow, what an opportunity. When in doubt, we zoom out, right? What an opportunity from, if you're a Bitcoin believer, from just in November of 2021 at 67,000, you're getting a 30% discount, almost. That's a big deal. 50%. Look at that. Those look like not financial advice, but it just dipped under 35K. Not financial advice, but if you're a Bitcoin, you believe in Bitcoin. 19 million Bitcoins in circulation now, only a couple of mil left to come out. This could be the opportunity, so tread carefully out there. So anyway, I hope you enjoyed the stream. If you did, do me a favor, hit that thumbs up. And see if you have any interesting comments. Again, if there's anybody you want to see on the stream as a guest, I'll do my best always to get them on here. Sometimes they don't want to do it for obvious reasons, because we're a tough crowd here. We ask tough questions. But if there's anybody that you want to see, come here and answer some questions, peer-to-peer lending or otherwise, just drop a comment. And I'll do my best. No guarantees. See if anybody has any interesting comments. Interesting, John says, interesting to see the average Number of investors at crowd property down from around 2,500 a month ago to 1,400 per loan. Proportion allocated about the same. I mean, my best guess, John, is that maybe people can't get enough allocations of these loans and they experience too much cash drag. I think assets is probably experiencing that right now, since still haven't seen any movement in the QAA, the access account. So crowd property just experienced too much money from investors and not enough loan allocation amounts. Mike Powell is Steamy Sutton. Pub relocation required. Off to the pub, Mike. Watch out for that liver. Yeah, and as Paul says, if you're on an auto loan in crowd property and you have a decent amount of money in your portfolio, you're probably just not going to get invested. Dave said guests of Wise, Nesta, and Quados. Quados. Let me write that down. Quados. What a name, Quados. Sounds like some medieval character from Game of Thrones. I give to you the great Quados, protector of the realm. Protector of the realm. Wise Nesta. Okay, I'll see. I'll take a look at them. Thank you, Dave. Annabelle's in Dorset this week, looking after my elderly mother who's been unwell since her 4th vaccine. Oh, I hope she gets better. Sorry to hear that. Loanpad had to bump their premium entry up 25%. Seems everyone has too much money and not enough origination. Yeah, more. I mean, all this money that's coming from Zopa and RateSetter and Funding Circle, it's got to go somewhere. These smaller peer-to-peer companies are going to benefit big time. That money's got to go somewhere. I foresee those companies that we talk about that are in my top 5 really hasn't changed at all. Loanpad, Lend Invest, maybe Unbolted, maybe Blend Network, Kuflink. They're going to get all of that money. Paul says Zopa was one of my worst investments. Assets, you said capital exchanges increased minimum for premium accounts. Yeah, I noticed that today. I was reading about that. I think you mean Assets Exchange. They put out a email. Let's see here. Where is it? I thought I saw it. So much to keep up on. These companies are always changing things. Increase in premium investor membership threshold. So now new members in their premium investor membership will have to have at least 50 grand on the platform because they said their property pipeline is expanding rapidly in both depth and breadth and is heavily focused on supporting housing, blah, blah, blah. Again, goes back to the same thing. Too much investor money, not enough loans. Move the entry point up. Slow down demand. Rocket Man, when will interest rates stop? I don't think they're going to stop anytime soon until inflation slows down. So, I mean, in the US, they're talking about anywhere from 4 to 7 rate hikes. I would imagine, inflation being what it is in the UK being high, same will happen. They'll just keep putting up the interest rates, trying to curb the problem. And the issue is it's a fine balance between if you put the interest rates up too high, you're going to cause a recession. So now that these governmentals, I call them mental because they're all mental, now they have this fine balancing act of trying to know when to stop those interest rates. But we'll have to look at those inflation numbers every month, and then maybe we'll be able to get a better picture of when those interest rates will stop. Paul B says my global index tracker was up 1% today. Was it? What is VWRL? Is that that? See, my index trackers, the funds don't update until the following day, so I hope it was up 1%. Invest and Fund have introduced a pre-bid option to relieve the timed bidding pressure. Should help. Yes, I agree. Should. Let's have a look. Ooh, Bitcoin down to 35,866. Dropping like a rock. I have a friend who said to me, Bitcoin's in trouble. It's terminal. Him and I disagree on that, but everybody has their own thoughts and feelings. Hi, Patty and Jeff, aka Jeff. Jeff by day, Patty by night. In France, bonjour. Yeah, I think the Nasdaq is a bit of a cliff today. Tesla's down, all the big ones. Yes, Funding Secure is one of those discontinued platforms in administration that we investors are unlucky enough to be a part of. Mike says, Property Partner, I'm almost back in profit. Their tax statements are rubbish, missing anything that isn't straight dividends and anything that is exited. Yeah, they haven't put out anything new on that platform too. That's concerning. Patty cashed in 60% of my stocks at a small profit and retained Vanguard, Apple, Microsoft, and Shell. Protum, plus Loanpad and Estate Guru. Peer-to-peer nonetheless. I'm happy to keep my rental properties in Wales. Yeah, I think rental properties are good, especially if you're not up to your eyeballs in debt. Nasdaq yesterday up the most in 2 years. Today it's down for the most in 2 years. Yeah, welcome to the volatility freight train. What happened to Philip K from Landlord Invest, who's supposed to come on? Still working on it. Let me put that on my list of things to do. Stephen Hale is in Nottingham. You're late. Welcome. Glad you're here though. Peer-to-peer would like to hear from Unbolted. Okay. Yeah. Let's see if they'll come on. I haven't said anything too mean about them. So I know last time I went to, was it last time? A couple of years ago I went to London. I tried to get a meeting with them and that did not happen. Well, we'll see. Ukraine is a worry. Yes, it is. Sad. Oh, another vote for Unbolted. Okay. Warren Buffett said he wouldn't give $25 for all the Bitcoin I ever mined. Yeah. Oh, and what would be the point in that anyways? If you owned all of the Bitcoin, then you'd be kind of selling to yourself. Yeah, look, Warren Buffett is 990 years old. He's not exactly up on the latest technology. So I can't wait to be able to say, hopefully, to Warren one day, you were wrong. I understand why you think the way you think about Bitcoin, but you were wrong. I hope I get to say that to him. I think that's going to do it. We're at 1 hour and 5 minutes. I need to go buy some Bitcoin while it's still under 36,000. But listen, thank you again for being here and your support, being a subscriber, hitting that thumbs up, leaving a comment on the YouTube channel. Every time you watch a video, it helps out a lot. And if you feel like joining the Patreon, you can. Link down there. If you want to become a supporter, everything helps, and I do appreciate you being here. I really do. We'll be back on Tuesday for another, hopefully a better report on the stock market and some crypto news, and then next Thursday be back. And yes, that's it. I guess that's it. So have a great weekend, everybody. Love you all. Be safe out there. Invest wisely. And I will see you in a few days' time. Take care.